Hello everyone, I'm Andy Wong. Welcome to the Australia Life and Investment Channel. Since November 2020, the Reserve Bank of Australia, RBA, has finally made its first interest rate cut. If you're curious about what they discussed today and how different sectors have reacted, stay tuned for this episode's educational sharing. As always, there are no investment recommendations in this episode's educational sharing, but I do have one suggestion. Remember to subscribe to my YouTube channel. Video. Today, the Reserve Bank of Australia, RBA, announced that the cash rate has been reduced from 4.35% to 4.1%, marking the end of nearly 15 months of rate stability. As we mentioned before, among the major reserve banks or central banks in mature markets, Australia is the last to cut interest rates, mainly because the RBA has started to feel that the target rate is already very close. The inflation situation, so they can alleviate the financial pressure on households and businesses under high inflation. We can see that after the RBA announced the rate cut, the reaction of the Australian dollar wasn't too significant. Overall, we can say it remained stable. Looking at the Australian dollar against the US dollar, it has been trading within the range of the past 1 or 2 months. At the time of recording, it was at the level of 0.6354. As for the Australian dollar against the Hong Kong dollar, it's about the same, maintaining around the level of 4.9429. I believe that recently, the Australian dollar might. The situation is more about tariffs than about interest rate trends. So for now, because the atmosphere around tariffs is relatively favorable, the Australian dollar is showing some short-term strength. However, from a medium-term perspective, I don't think there's a need to be too pessimistic. This is because, for now, regarding the direction of interest rates, the RBA, although emphasizing that this is the beginning of an easing cycle, will act cautiously to avoid inflation. Rebound. Among the factors they need to consider is the economic outlook. For example, the RBA's attitude towards the future economy is relatively cautious. Although we can see that the economy, under the influence of interest rate cuts, might experience a stimulus, there are still some concerns about growth in the private market as it initially stabilizes, especially in the global market. There are many uncertainties, such as tariffs. Therefore, their tone is relatively neutral to slightly strong. This is one of the reasons that might cause the Australian dollar to remain relatively stable in the short term. On the other hand, how about the Australian stock market? Today's performance seems a bit like short-term profit-taking because the market had already speculated on many of these factors. However, I believe that in a rate-cutting environment, as I have shared with you before, the stock market might still receive some support, especially for high dividend stocks or assets with stable dividends. Furthermore, as mentioned before, sectors like REITs might also benefit. Of course, it's possible that even the real estate market could have some investors or buyers who benefit from the RBA's rate cut this time. For example, if we look at the reaction of the 4 major banks, this time they have all uniformly cut rates. You can see here that I've summarized it for everyone. Whether it's NAB, Westpac, ANZ, or Commonwealth Bank, they have all reduced the loan rate, specifically for home loans, by 0.25%. Overall, taking the average, we can say, in terms of loans, the market feels that everyone's monthly expenses on loans have decreased by about 100 Australian dollars. The previous statement might have been a bit general, so I also used some online information to show everyone. For example, under different loan amounts like 500,000, 750,000, or 1 million Australian dollars, what are the current monthly payments? How much are the repayments each month? Overall, this is how it looks. In these 3 examples, the reduction in the amount ranges from 77 to 154 Australian dollars per month. Of course, this is a very general view because we also need to consider different factors. For example, how you pay for different mortgages And what about your offset account? How will your fixed mortgage rate be affected? There are many different factors that you might need to discuss with your mortgage broker or carefully study on your own. In any case, the RBA's rate cut this time finally marks the beginning of a new phase in Australia's monetary policy, entering a relatively easing cycle. For investors, how do they reallocate in this new environment, where interest rates are slightly slowing down their assets? Perhaps it's worth paying attention to the different approaches people are taking. Alright, today's impromptu educational sharing ends here. I hope everyone will support and share it with friends. Thank you very much.
Hey everyone, I'm Andy Wong. I'm one of the few people here in Australia and Hong Kong who is licensed or qualified to help local clients and companies with diversified investments, like my years of experience with US stocks, Australian stocks, SMSFs, ETFs, and so on. I hope to share my investment and life experiences with the Chinese community in Australia and Hong Kong through this YouTube channel. If you're interested in having a one-on-one chat with me, you can book a time through the link below the video or in the channel's content. Schedule a time with me. Thanks for your support. Remember to leave a comment, give a thumbs up, and share. Our teaching share doesn't include any investment advice. So, before you make any decisions, remember to consult the relevant licensed professionals for advice. Thanks a lot.